In the last episode, we talked about the difference between a card simply rotating inside a price range and actually repricing into a new one. But to understand why those shifts happen in trading card markets, we need to look at something that often sits beneath the surface: liquidity. In this episode of TCG Market Playbook, we're looking at how liquidity shapes price movement. Liquidity is simply a measure of how easily a card can change hands without dramatically moving the price. In markets where many copies are listed, buyers and sellers can transact without pushing the price very far in either direction. But trading card markets don't always behave that way. Sometimes collectors begin holding their copies, fewer listings appear, and the amount of available supply quietly starts to shrink. One useful way to recognize these conditions is by observing the speed of price movement on a chart. When price climbs gradually over time, it often reflects a market where buyers are steadily picking up copies while enough listings remain available to absorb that demand. In this first example, the price rises slowly as supply is gradually removed from the market. In the second chart, the pattern shifts slightly. Price consolidates for a period before eventually pushing higher, suggesting that the number of available listings is starting to thin out. But this is where the market can reach a tipping point. When supply becomes very limited, price behavior can change much more quickly. In this final example, the move upward happens far more abruptly. With only a small number of listings available, even a modest wave of buying from collectors can push prices higher in a short period of time. Understanding liquidity helps explain why some cards drift upward slowly, while others appear to jump almost overnight. In many cases, it isn't just demand driving those moves. It's the simple reality of how many copies are actually available in the market. And once you begin to recognize how liquidity shapes price movement, another important question emerges. What happens when the available supply doesn't just thin gradually, but suddenly changes all at once? That's what we'll explore in the next episode.